Hey there folks, this is a new video in which I am going to cover Forex Harmonic patterns. So we'll keep this agenda very short. I want to cover only the points which are going to help you in your day-to-day trading. So this is what we are going to cover in this video. We are going to see what are Forex Harmonic patterns and how do they actually work. We are also going to cover a Gartley Harmonic pattern based strategy. Basically that's a strategy which I think can be used on bad patterns as well as not so much on Cypher patterns, but bad patterns and Gartley patterns this strategy can be used. And I'm also going to cover some important points or important mistakes, rather the kind of mistakes you should avoid in while using the harmonic patterns. So let's get started. Yep. So harmonic patterns is basically they provide the guidance about what can happen, which direction the currency pair may go in the future. So these are most like these patterns are based on primarily observation of the forex traders, and harmonic patterns have started becoming more and more popular of late, and they are heavily based on Fibonacci retracement levels. And that is why they are kind of very accurate, because there's a Fibonacci element to it. And if you have watched my previous patterns, I have told you like how Fibonacci patterns are kind of very helpful and kind of very accurate in identifying the entry point as well as when to exit a particular trade. So harmonic patterns are also very accurate because they are based on the Fibonacci fundamentals. And there are multiple variations of the harmonic patterns, which I'll come to in a second. If you look at this graph here, this is a typical harmonic pattern. There's a upward direction movement of the currency pair, then retracement, then again upward direction movement, and again a retracement. So the different kind of variations are like the Gartley, the Bat, and Cypher. What happens in the Gartley pattern is the point B. This point B basically comes at a 61.8 retracement level. For example, if this B point would have come somewhere here, it would have more likely meant that this is a Gartley pattern. Whereas in a bat pattern, typically you will see that the bat pattern is typically at the 38.2 or 50.8 Fibonacci level. So this looks to be more like a bat pattern with one main difference. The main difference is, in most of the harmonic patterns, the point C, it will fall below, it will fall within the X and A. This is the X and A line. And lastly, the D, the point D, for a Gartleyand Bat pattern, this point D is always within the X and A. Whereas in Cypher I have seen that the D point, it extends beyond the X. So, but all in all, in all these patterns, Gartley is the most important. I'll cover another example in the next slide. But just remember that Gartley is the most frequent kind of occurring pattern and is one of the most popular. So let's look at how to read the harmonic patterns. So let's look at the bearish Gartley pattern. Let's imagine the currency pair has gone from this point to this point. When it retraces, this is the point, for example, where the retracement has happened. This is the point B. In the Gartley pattern, this will happen at 61.8 Fibonacci retracement level for X and A line. In Bat pattern, it will happen at 38.2 or 50.8 level. After that, the currency pair will make a retracement again, and it will form a, it will start a reversal at 38.2 or 61.8 level. Basically, it is going to take a Fibonacci level of this line. So if it takes a Fibonacci level of this line, the next level is, it is expected that the next level will be an extension of this Fibonacci movement, and the length of this line C to D is mostly equal to line A and B. Okay, so again, if you see here, this level C is within the X and A. This D level is also within X and A. So this is the biggest movement in Gartley and the Bat pattern. The point B is 61.8 of this level. Point C is, it can be anything, 38.2, it can be 50% or it can be 61.8 of A and B level, A and B movement. And the D is the Fibonacci extension, which is typically the C and D is going to be length of A and B. And the other way around goes in bullish. 61.8 or 38.2 or 50 level, depending on Gartley or Bat pattern. Then further movement of currency pair in the other direction, B and C, which is also 38.2 or 50% or 61.8, and then the D pattern. The D and D is a Fibonacci extension of A and B movement, and typically the length of C and D is equal to length of A and B. Once the D level is established, that is the point where the trade has to be opened. So the crucial thing is to identify this pattern correctly, because your entire trade is dependent on if you have identified the harmonic pattern correctly or not. And like I have mentioned here, 90% of time point D will occur within X and A. If it is not within X and A, that means it is a Cypher pattern. In Cypher pattern, this point is outside X and in the case of bullish Gartley, D will be below X. In the case of bearish Gartley, D will be above X. Now, one thing is very crucial. To enter the trade here, you need to know when the reversal has happened. For that to happen, you need to understand the candlesticks and Fibonacci levels very thoroughly. You need to have a good understanding of Fibonacci and the candlesticks. Otherwise, there's a higher probability that a mistake will happen. Now let's look at a particular pattern strategy, and I'll mention it using an example here. So this is a trade of this is a chart of Aussie USD 1 hour chart. If you see here, this is a Gartley pattern which has been created. This is your point X, this is your point A, this is your point B, this is your point C, and this is your point D. So let's look at and try to understand what is our trading strategy. Identify a harmonic pattern on 1 hour or above chart. So the crucial thing here is the point D needs to be between X and A, because this is a Gartley or Bat pattern trading strategy. And the point B, this has to fall between the 38.2 and 61.8 Fibonacci level. If it falls below, this trading strategy will not be that effective, or if it falls outside, then it is not a harmonic pattern at all. So it has to fall between 38.2 and 61.8 Fibonacci level. In this case, this is a 61.8 Fibonacci level. This is a 78.6 and this is a 61.8. Now, once a harmonic pattern has been identified, as you can see here, the currency pair starts moving in the upward direction. When this reversal has happened, it's the time to open the trade. As soon as you open the trade, make sure that you place the stop loss 10 to 15 pips below the point X. Remember, this is the Gartleyand Bat pattern based strategy. So this stop loss should be 10 to 15 pips below the X point, and 10 to 15 pips I'm recommending based on the assumption that the trade is on a 1 hour chart. If the trade is, for example, on a daily chart, then the stop loss has to be about 30 to 40 pips below the point X. Once your trade is open, as soon as you reach the level B, as soon as your trade reaches level B, then move your stop loss to your entry point, because this is a prominent resistance level. At the resistance level, there is a chance that the currency pair may retrace. So you need to move your stop loss to the entry point, so that from this point onwards, your trade can never end in a loss. After that, if the trade continues moving in the upward direction, then close the trade as soon as you have reached the point C. When that happens, this will look like a double top. For example, if the trade continues and reaches here, this will look like a double top. At that time, it's a good idea to close the trade. So, if for example you have opened the trade here, you can assume that for example you have risked about 40 pips. For example, your profit will be about 75 to 80 pips, which is a good range, about 1.5 to 2 times of the 1.5 to 2 times risk reward ratio, which is fantastic. So again, the crucial thing is that your stop loss has to be below the point X, and the value of the stop loss will depend on what kind of chart you are trading on. For a 1 hour chart, 10 to 15 pips below the X point should be good. Your first point to move your stop loss to the entry point will be at as soon as your trade reaches a point B, or you can close half of your trade here, half of your lot here rather, and you can close the trade when the price reaches point C. Now let's look at some of the important points which are something very crucial for the traders to know when it comes to using the harmonic patterns. Like I mentioned earlier, the crucial thing in using the harmonic pattern correctly is to identify it correctly. If a trader makes a mistake in identification of a harmonic pattern, the trade may end in a loss. There's more probability that the trade may end in a loss. So if you are new in forex trading, I would suggest you to not try the harmonic pattern because it requires some kind of experience. You need to identify the harmonic pattern correctly. If you make the mistake here, the trade may end in a loss. The harmonic pattern works very well on all time frames, but the accuracy is much higher on a time frame of 1 hour and up. Anything below 1 hour, you may see that there is a lot of noise, a lot of whipsaw which may happen in the price, and the harmonic pattern may not be that accurate. So time frame 1 hour and up, harmonic pattern becomes more and more accurate. And also, like I mentioned earlier, to use harmonic patterns effectively, you must understand Fibonacci and candlesticks very well, because the entire harmonic pattern is based on Fibonacci levels, 61.8 or 38.2 or 50, or like for example here 61.8. If you look here, it's 61.8. So 61.8, 38.2, 50 level, 50% level, these are all Fibonacci levels. You need to have good understanding of Fibonacci. At the same time, you need to have a good understanding of the candlesticks, because your entry is dependent on the candlesticks. If you're not able to read the candlesticks correctly here, then you may either take the trades prematurely, or you may be late in opening the trade. So know Fibonacci and candlesticks very well if you're using the harmonic pattern. Now I can help you here. Since you have invested some time in this particular video to understand the harmonic patterns, I have two more highly effective forex candlestick based patterns that work very well with harmonic patterns and the Fibonacci levels. I'm also ready to tell you one forex candlestick mistake that most of the traders make, and I'm also ready to tell you another highly accurate forex trading strategy which is based on candlesticks. So there's no complexity to it. All you need to do is visit my website forexcandlestickmagic.com, or you can click on this particular link, and you can go to my website and get this entire package for no cost. You will get two highly effective forex candlesticks patterns that work amazingly well with harmonic patterns and Fibonacci levels. You will also come to know one candlestick mistake that more than 50% traders make, and you are also going to get one highly accurate forex trading strategy which is based entirely on candlesticks. Visit www.forexcandlesticksmagic.com and I'll see you there. Thanks again for watching this video, and I'll see you on my website.